All right. So, good evening, everyone. So, today we want to briefly look at a standard. I believe we have treated we have treated borrowing cost. That's IS 23. We also did part of IS 16, which is PPE. So I expect us to go and read further on that. We don't have much time again. We have a lot of work to do. So after this standard today, in our next class, we will start our group account, because group account is also very bulky, because a lot of things we need to do there. So I'll briefly treat or summarize this standard. IFRS 5, non-current asset held for sale and discontinued operation, or asset held for sale and discontinued operation, right? So after today's class, please let's try as much as we can to read more on this standard, right? It is one of the simplest standards if you understand it very well, if you give attention to it, right? So let's dive into it now. So a non-current asset held for sale, right? As the name implies, this is a non-current asset that the company or an entity has decided to sell off, right? Assets that they have been using, but they want to sell it off. But before the sales, before the disposal, right? This standard, this IFRS 5, accounts for how this asset should be measured and how this asset should be presented, right? So it talks about, or it prescribes, the measurement principle and the presentation, right, and the recognition principle for all non-current assets held for sale, or non-current assets that an organization or an entity have decided to classify as held for sale, or they want to resell, or they want to sell the asset, or they want to dispose the asset. So this standard covers that, right? So this standard has a scope, right? It has what it covers and it has what it does not cover, right? So IFRS 5, as the IFRS 5, as I earlier said, covers asset held for sale and a unit of business that, or operation of business that is no longer continuing, or part of the company or part of the entity that is no longer continuing operation. So this standard covers two aspects: one, non-current asset held for sale, then secondly, discontinued operations, right? That is what this standard covers. So the objective of this standard is to specify the requirement for the classification and measurement and presentation of non-current asset held for sale, like I said earlier. Also, it updates rules for the presentation of discontinued operation, like I also said, right? So it covers non-current assets held for sale, and also discontinued operation. That is what this standard covers. So let's get into it. So like I said, the scope of this standard, the standard does not cover investment property, right? That is assets held for rental income or capital appreciation. This standard does not cover it. IAS 40 covers investment property. When we get to IAS 40, we will talk more on that. This standard does not cover deferred tax asset, right? IAS 33. Sorry, IAS 12 income tax covers that. IAS 33 is EPS, earnings per share. So IAS 12, which is income tax, covers that deferred tax asset, right? This standard also does not cover agricultural asset or biological asset, right? IAS 41 does that. This standard also does not cover this standard does not cover in financial instruments, right? IFRS 9 does that. So these are the limitation, the scope, what the standard covers and what the standard does not cover, right? This standard covers only asset held for sales, right? Now we've been talking about asset held for sales and discontinued operation. Now I want to ask a question. Do we just pick an asset and say this asset is classified as held for sale? The answer is no. We don't just pick an asset and say this asset is classified as held for sale or discontinued operation, right? There are recognition requirements. There are recognition requirements, right? For an asset to be classified as held for sale or discontinued operation, right? So we are diving right into the requirements, right? There are basically 7 requirements, right? Practically there are 7 requirements for any asset to be classified as held for sale. There are 7 requirements it must go through, but these requirements are grouped into 2, right? If this is not done, you will see that management will be using this standard. Please, Udoye, mute your mic, please. Can you hear me?
Yes, sir. Good evening. Sir, please, your voice is echoing, like it's repeating.
Okay. Okay, can you hear me now? Can you hear me now?
Yes, sir.
Okay, is it still echoing?
No, sir.
All right. So let's continue. Like I said, this we are treating IFRS 5 today, right? That is a non-current asset held for sale and discontinued operation. Like I said, we won't spend much time here today, right? So after today, after explaining briefly, summarizing this standard, we should try as much as we can to read it up, right, on our own. So like I said, if these requirements are not set by the standard setter, management will be using this standard to aid window dressing, right, or creative accounting. Now, how does this standard, or how can management use this standard to window dress? Do we know what window dressing is? Hello, do we know what window dressing is? Or earnings management?
No, sir.
Alright. So window dressing or earnings management, as the name implies, right? Okay, somebody dropped the chat. Let me check, please. Alright, Ibrahim said no. Okay, so window dressing or earnings management is a situation where management try to manage their profit, either to inflate it or to reduce it for their selfish purpose or to mislead the public, right? They look for ways. So like window dressing is illegal and unethical. That is trying to inflate or falsify figures. That is window dressing. Management trying to falsify figures, to inflate figures, bringing things or bringing a revenue that did not happen in the financial year, right? Just to make sure their revenue is high, so that shareholders will praise them that they are doing well, right? That is window dressing. Now we see creative accounting. Creative accounting is legal, but it is unethical. Creative accounting deals with using accounting standards or loopholes in the accounting standard to increase earnings or to increase revenues. So one of the loopholes, right, that can be used is this IFRS 5, right? Now, according to the standard, any asset that is classified as held for sale is no longer depreciated, right? You cannot depreciate it again. So depreciation will reduce our profit, right? Depreciation will reduce our accounting profit. So management may want to classify asset as held for sale this period, right, so that they will not charge depreciation on that asset. Then maybe after this accounting period they will reverse it. That is ordinarily if there is no condition to be met before an asset can be classified as held for sale. Do you understand that now? Mr. Ibrahim, do you
Yes, sir.
understand that?
Yes, sir.
All right. Okay, so let's look at this. Let's look at these conditions that must be met before an asset can be classified as held for sale, right? Like I said, there are basically 7 conditions, but they are classified into 2, right? So the first
Yes,
one
sir.
is the asset must be available for immediate sales in its present condition, right? The asset must be available for immediate sale in its present condition. That's the number one condition that must be met, right? Then the second condition that must be met is the sales must be probable. So it is this one that is subdivided into 5 that makes it 7 conditions, right? That makes it 7 conditions. So this the sales must be probable, and for this to be the case, what do we do? What are the conditions to make the sales probable, right? That is what we are looking at now. The sales must be probable, right? So number one, for this to be the case, number one, there must be management commitment, right? Appropriate level of management must be committed to selling the asset, right? That's number one. Management must agree that we want to sell this asset. Are we following?
Yes, sir.
Yes, sir.
All right. So management must agree, the not just management, relevant management, right? People that have the um people that have the decision making powers or authorities within them must agree that we want to sell this asset, right? Number two, an active program to locate a buyer must have been initiated, right? Like marketing campaigns, making publicity about selling the asset, that we want to sell this asset. Management should not just keep it to themselves that okay, we want to sell the asset. It must, or the management must start looking for buyers to buy the asset, right? An active an active program to locate a buyer must have been initiated, right? The third one is the asset must be actively marketed for sale at a price that is reasonable. That is, the price must be reasonable in line with its fair value, right? In line with its current fair value. Not that management want to sell the asset, the company wants to sell the asset, but the price they are charging for the asset is times 2 of the current fair value, just to scare people away. No, it shouldn't be like that, right? It shouldn't be so. So the price for the asset, the selling price must be reasonable in line with its current fair value, right? That's the third point there under the second condition, right? Like I said, we have 7 conditions, but they are grouped into 2. The first one is the asset must be available for immediate sales in its current condition, right? Then the second one is that the sales must be highly probable. That is, the probability of selling the asset must be high, right? And for this to be the case, we subdivided
So
uh,
you start.
eh?
So please, can you come again with the first the
Okay,
first one?
the first condition, right?
Yes, sir.
Okay, like I said, there are two conditions that must be met, but these two conditions, the second one is splitted into 5 conditions, right? So the first condition out of the two conditions that must be met is the first one is, right, the asset must be available for immediate sale in its present condition, right? It must be available for immediate sale in its present condition. Number 2, the sales must be highly probable, right? So this sales must be highly probable is subdivided into 5 conditions, right? Before you can say the sales is highly probable, these 5 conditions must be met. Are you following?
Yes, sir.
All right. So the sales must be highly probable. Then I have explained the first 3 conditions under this, right? Number 1, I said appropriate level of management must be committed to selling the asset, right? That is, management must agree that they want to sell the asset. Number 2, right? Number 2, an active program to locate a buyer must have been initiated, like marketing campaign, using billboards, media, and all that to locate a buyer, right? Number 3, the selling price or the asking price must be reasonable in line with its current fair value. It must not be unreasonably high. That is the selling price or the asking price, right? Are we following?
Yes, sir.
Okay. Then number 4, the sales is expected to happen within 1 year, right? So within this accounting year, the sales must be expected, or the sales is expected to must have happened, right, within 1 year. It shouldn't be for a longer period of time. You should not be carrying that asset as held for sale for a longer period of time, right? Then lastly, there is no plan to withdraw the asset from being sold, right? The management should not have any plan to withdraw the asset from being sold. Is that clear?
Yes, sir.
All right. So management should not. Now I want to give an instance, right? I want to give an instance. Now company A has an asset. Company A has an asset, and the management have decided that they want to sell the asset, right? Company B have uh, Company B has interest in the asset, has expressed as interest in buying the asset, right? Please take note. It's a question I'm asking. No. Company A has an asset. The management have decided that they want to sell the asset, right? Company B have expressed interest in the asset. They have discussed the selling price and they have agreed on the selling price. But company A is still using the asset and they are not ready to stop using the asset within this year, right? They are not ready to stop using the asset, but they have agreed price with company B to sell the asset to them, but they are not ready to stop using the asset for now. Can you classify that as an asset being held for sale, considering the conditions we just listed?
No,
No, sir.
no, sir.
Okay, why?
Because there's no agreement between company A to sell the asset. That's why the company B is willing to buy the asset. And again, um, company A want to sell the asset and they agreed with the price with the company B, but still they don't want to give it out.
Yes, they don't want to give it out yet. So what does that mean? Which of the condition does that contradict? Or
The
which of the
condition, the
condition?
first condition, it contradicts the first condition, which says the asset must be available for immediate sales.
Good. Yes, the asset must be available for immediate sales, right? So when it comes to this standard, please be ready for scenario-based questions. When it comes to this standard, examiner may test your knowledge by giving you different scenarios, right? Then when answering the question, you don't just say no, right? If you have the time, list out the conditions of the standard, what the standard says, right? Then you state where the question or the scenario complies with the standard, whether it complies with the standard or not. Like this scenario I just painted now, I think they met the whole conditions except condition 1, abi, which states the asset must be available for immediate sales in its current condition. But in this scenario, the asset is not available for immediate sales, right?
Yes, sir.
Okay, so we have to know how to answer scenario based questions, right?
Yes, sir.
So let's move on to measurement. How do we measure assets classified as held for sale? And this class is taking longer than expected. I didn't plan to spend up more than 30 minutes here. Okay, let's look through this measurement criteria. How do we measure an asset classified as held for sale, right?
Yes, sir.
Okay, so non-current asset that qualified as asset held for sale should be measured at the lower of their carrying amount and fair value less cost to sell. The lower of carrying amount, right, and fair value less cost to sell. That is net realizable value, right? I believe we know what net realizable value is. Do we know that?
No, sir.
Eh? Ibrahim, did you
Please
say
remind
yes?
us, sir.
Okay. Net realizable value, right? Net is talking about, right, selling price or the amount you can realize from that asset minus any cost it will take you to sell the asset. That is net realizable, net of all the cost, right? So asset classified as being held for sale is measured at the lower. Which one is lower between the carrying amount and the net realizable value, or fair value less cost to sales, or fair value minus cost to sale. I believe that is understood, right?
Sir, please excuse you. You said lower or carrying amount and
Yes.
net realizable value less cost to sell.
No.
Or
When you are using
okay.
net realizable value, net realizable value is, right, is your fair value or your realizable value minus any cost any cost you incur to sell the asset, right?
All right, sir.
Yes. So when you say net realizable value, you don't talk about cost to sell again, because cost to sell is included in that. For you to get your net, you must have removed all your costs from gross, abi.
Ah, yes, sir.
This why you say is it confusing?
Yes.
All right, so let's stick to, okay, but you understand fair value less cost to say. Should we stick to that?
Yes, sir.
We should
Yes, sir.
stick to that,
Sir,
right?
hello, sir.
Eh?
So I want to understand this net realizable value you're talking about.
Okay.
Fair value, that's the amount of the asset currently in the market.
Yes.
The cost incurred to set the asset, that's the like assets that you have, you want to sell it, like to resell it.
Yes.
That's the cost that's incurred, like all the um costs incurred when reselling the asset.
Yes. When you are selling the asset, not the cost of the asset, oh, not the cost you bought the asset.
Yes, like when we sell, like you bought like the asset that you're using now, you bought it 50,000.
Yes.
Then you want to resell it. You now resell it at the price of 40,000, 30,000.
Yes. Now,
Okay.
yes,
So
when you are selling it at the price, let's say you are selling it at the price of 40,000, you are not talking about the cost you bought the asset, right? Right? That one is included in the carrying amount already. I believe we know how we arrive at our carrying amount. Carrying amount is your cost or revaluation value if the asset has been revalued already. But if the asset has not been revalued, your carrying amount is your cost minus accumulated depreciation and impairment loss, right? That is how you arrive at your fair value. So when you are talking about at your carrying amount. So when you say carrying amount already includes the cost of the asset, the initial cost or the revaluation value of that asset, right? So this cost to say that we are talking about, now let's say you want to sell your laptop, right? Your laptop is an asset, and you agree with the buyer that you will send it to the buyer, you will deliver it to him, right? So the cost you will incur in taking that laptop from your office to the buyer's office is cost to sale. You classify that cost as cost to sale, right? Any cost you incur in marketing or making publicity about the asset, telling people I want to sell this asset, I want to sell this asset, is part of your cost to sale. Is that clear now? Hello?
yes, sir.
Yes, sir. Yes, sir.
Is clear, right?
Yes, sir.
Yes,
All right. So, like I said, this is measured at the lower of carrying amount and fair value less cost to sale. That is how this is measured, right? So presentation of this of asset held for sale. Presentation, this asset, any asset that is classified as held for sale must be removed from your PPE. Clear? Is that clear?
Yes, sir.
No,
It
sir.
is not clear, Abi?
Yes, it's not clear, sir.
Okay. So any asset that pass all these conditions, that has met all these conditions, right? That you have classified as held for sale, you don't present it in your PPE again. You don't present it in your non-current asset again, right? You present it separately on the face of the financial statement. So it is presented separately on your balance sheet as a current asset, right? It is presented as a current asset. Remember, one of the conditions say the asset must be, or the sales must be completed or must be done within 1 year, right? And any asset that has a life of 1 year is a current asset. True or true?
True, sir.
Okay. So because of that condition, we are expecting that the asset must be sold within 1 year. So you cannot classify an asset that will be sold within 1 year as a non-current asset, right? You can classify it as a non-current asset because it is expected that you must sell the asset within 1 year. Is that clear?
Yes, sir.
Okay. So another thing is you don't depreciate this asset. Any asset that is classified, the moment the asset satisfied all these conditions, or the moment the asset meets all these conditions, you stop depreciation immediately, right? You don't depreciate that asset again. So in a
Sir, please,
case,
I want to ask a question.
okay,
Let's assume these assets met
uh,
all the conditions
yes,
and sales have not been effective, that they've not effect the sales.
yes.
Will Are we still going to categorize it as non-current asset or current asset?
If the asset, right,
The asset is
as
still in operation.
if the asset is still in operation, right,
Yes, sir.
and the sales did not happen, when you are preparing your account, you have to reverse
Okay.
it,
Okay.
right? If it did not happen
Okay.
within the balance sheet date or within the financial year, you have to reverse it.
Okay.
You cannot capture it as held for sale again.
So it will be categorized as non-current assets.
Yes, because you cannot be
Mm.
carrying head for say, head for say, head for say, right? Now,
Okay.
the thing is this: in this year, right, that you are preparing your financial statement, right? If the asset was not sold, but you have classified it as held for sale, right? You have to, in the notes to the financial statement, you have to disclose it that you carry this asset as held for sale. The asset met all the conditions, but it was not sold, right? So that when you are reversing it, readers of financial statement will see that, oh, this company made a disclosure about this earlier. So they will not be confused about the financial statement. Is that clear?
Yes, sir.
Okay. So this asset is no longer depreciable. You cannot depreciate it again, but you subject it to impairment test, right? You subject it to impairment test. Now we have another class tomorrow, right? Tomorrow, Wednesday, abi?
I don't
Hello.
know. This is my first time of joining the class. So.
This is your first time, abi? Wow.
Yes, sir.
And you didn't tell us to welcome you. All right, so we have another class tomorrow. My battery is about to shut down now. I don't know why they didn't give us light.
Oh yeah.
So we'll see tomorrow. We'll conclude this standard tomorrow. Then see if we can introduce group account, right? Because
All right,
group
sir.
group account is always number one question. It's
Okay.
always number one. Either group cash flow or group statement of financial position, or financial position and statement of profit and loss and other comprehensive income. So group is always number one. Sometimes they may bring ratio analysis, but it is not common. But there is no how you go to the exam and you not see group account, be it number one or from the 20 marks question. So tomorrow we will try to see if we can start group account, or maybe we'll do publish account first before group account. Whichever one we pick tomorrow, we will start with it. Is that clear?
Yes, sir.
Yes, sir.
All right. So
At the
see you
same
tomorrow.
time.
Yes, it's same time.
All right, sir.
Yes. So see you tomorrow. Good night.
Thank you.